Hi guys, welcome to lecture one of the technical analysis module in the Atlas Blueprint. To start off with, I want us to take a look at a few key principles that we use to allow us to spot and act upon opportunities in the market. We're going to start off with the principle of supply and demand. Now, supply and demand, in essence, is just areas in the market where the big players, the central banks, the hedge funds, the institutions, where these sort of institutions want to buy in at the market and sell at the market. So the demand zone is where there's demand for an asset and they want to buy. And supply zones are where they want to distribute their assets, so they want to sell off at a certain price. Now, as you can see on the screen, we have as you can see on the screen, I've put a detailed explanation, just taking a look at the demand zone. And we'll go over why we need to look at supply and demand zones in this sort of way in a moment. So we've got this zone, we've highlighted as a demand zone. There's been previous buying at this level. It could be a key psychological level as well. So here we've got 142s. So we'll just highlight that just so that we know that just above our level, we've got a psychological level of 142s. Did not mean to pull up some code on the screen there. Okay, so we've got a psychological demand zone around this psychological level. So price comes into this demand zone and there's 500 lots on the bid which get activated. These orders are enter, we push away. Now we sell off again, we come back in, and because there's been some previous buying over here, so we see this buying here, there's now 1,500 lots on the bid. Okay, there's more traders looking to buy at this zone because of the previous buying, or the recency of the previous buying, I should say. We now push away again. We break market structure. So people look at this supply and demand zone, or support and resistance. They work very similarly. And as price comes back, you see there's not much liquidity there. Okay, there's only 300 lots on the bid this time because we took a lot of the liquidity on the last run, which took this big run up here. Now, I'm not going to make it too complex, but there's most likely a demand zone up here, which is where, we've had some orders fulfilled up there, hence the price coming back down to this demand zone. As we hit this demand zone, we have a little reaction as the 300 lots enter the market. And these numbers, I've just pulled them out of thin air just as sort of examples. Don't read too much into them. But as we move away, ignore this green line for now, we can see that a bank algorithm pushes price further into liquidity because there was only 300 lots on the bid. So the bank algorithm executes 2,000 lots here, short, pushing price past these points, past all these points of previous lows within this demand zone, pushes price down there where we have sell stops activated. Okay, so we might have 2,000 lots short activated underneath this demand zone. The reason we have this is because all the longs, people who bought up here with their stops below the demand zone, they're going to be squeezed, they're going to be taken out. If you're long in the market, your stop loss is essentially you selling out of your position. So if we're long here, as price takes our stop, we sell back to the market at a lower price, which activates selling pressure in the market. Okay, the next reason is because we have breakout traders who look at this as a support zone. As soon as we break out, they want to sell this as resistance. So upon the retest, or just as we breakout traders and algorithms that work on the other side will be activated, creating a huge influx of sell stop orders and at market selling orders as well. So anybody who says, as soon as we break through this resistance, I want to have my stop above the last high, my target down here, and I want to enter upon the break. Price is going to come in, tag them in, and it's pretty much going to run straight to their stops. Not all the time, but in this example, this is what we see a lot in the market, and this is in essence what we trade. So they're going to run straight to stop. But what I'm trying to get at is the liquidity that is down at this low here, with all these sell stops activated. Now, the smart money, so the institutions, the banks, the market makers, who've all bought up on this demand zone previously, they're going to want to protect their orders, okay, and offload the whole or rest of their trade order here. So this could be the first time that they enter the market, they could have pushed it in for their first entry, or they could just be working this zone and keep buying back as price retraces back down to this demand zone. And now let's say, for example, there's 10,000 lots hit the bid down here. Now that we've got this excess liquidity of all these orders, they can offload some of their 10,000 lots, which shoots price up. Now, what we have here, and we come back to this green line, is you can see that market structure would be broken here. Yeah. So our previous high, that's now been broken. Price travels away because of the 10,000 lots that have hit the bid, squeezes all the short sellers out, all the breakout traders, and all the algorithms that activated shorts down here, they're all taken out. So shorts have been squeezed here. Institutions may still have some liquidity left. So if they do, they're going to perform an RTO, or what we call a return to origin. So the origin of their move is this zone here. Okay. This is because the institutions or the algorithms have pushed price into this liquidity to allow them to offload such a big size. Okay. So that's the origin of their movement. So price is going to come back down into our bid zone, which is this green line here. That's where we're going to look to make the bid, and then price is going to bounce. Not all the time again. I'm not saying this as a matter of fact, but this is what we look for. This is our strategy. So we're going to hit the bid here where we've seen the institutional moves, and we're going to wait for price to break structure and keep moving. And then we'll end up managing our positions. Now, what I want to do is I want to take a look at a live chart. So if I just move down here, currently on an hourly chart of cable. So you might be thinking, how can I spot these areas of supply and demand? Is it like basic support and resistance? Is it levels? The key thing that I want to sort of drill home is the fact that this isn't specific price levels. You are going to be looking for zones. You know, so we could look at this. In the retail trader space, you would be taught that this is, you know, significant resistance. We've got some support down here and support down here. So when price retraces to these points, are you just going to sit there and, you know, sell this resistance with your stop above the last high, potentially? Just sell into resistance, or are you going to wait for confirmation? Now, we can clearly tell that this is a supply zone. So what can we do to narrow down this supply zone so that we know that the institutions are taking place here? So we just get rid of this just a moment so that you can see easier what I'm talking about. So we have this big high here, okay? So we swing up and we swing away. Now, it doesn't have to be always such a nice swing into price to create, you know, swing points that we want to take advantage of, but this is just a really nice example. So what we're going to do is we're going to highlight that high, and we're going to take a look and see what price does as it reapproaches this area. Now we can see that price takes a run on the liquidity above these highs. Remember what I was talking about? We're going to have buying orders, buying the breakout there. Yeah, there's going to be a lot of orders hitting the bid up there from breakout traders and traders with their stops. If somebody shorted the market here and had their stop just above that high, they're going to get taken out if they haven't, you know, hit target. So they're targeting this previous low. There is going to be some buy stops up there from trader stops. Okay. So as we come up here, what we're going to look for is we're going to look for a market structure break to the downside, so that we know we're not just going to sort of plow through this resistance, if you will, or this supply zone, and make it so that we can highlight where the institutions are distributing their assets. Okay, because that's what we want to know. That's the key thing in this area. So we can see we have another run on liquidity above this high. Let's make that. So just put a couple of ticks up here so that we know we've got the run for liquidity with a market structure break. Okay. So what this means, once we've got this market structure break, is that we've got a price to ask. Okay, so basically to sell. So when you're asking, that's basically mean you're willing to take that price to sell an asset, and the bid is just you're willing to bid that price to buy the asset. Okay, so as price comes through, breaks through market structure here, we could set a pending order so that on the retest of this ask price, with a stop above that high, we can target, let's say we target this level down here, you can see price comes back up. Now we do run significantly in drawdown, both returns to this area, but the trade is still valid at this point. Okay, we're still in an ask zone. We are in another ask zone up here. I haven't cherry picked this. This is a live example from the charts from today. So I'm fresh with what's going on at the moment. So we've got a run on liquidity up there. We also have a break and market structure here with a longer term ask price here. Okay, so to me, we're still valid here. Now, I would have taken this position this morning specifically. I wasn't looking at this yesterday as a significant move that I wanted to see. But as price come up this morning, I wanted it to take out this high, but we didn't actually get that. So we just formed some relative equal highs. Okay, so I wanted some liquidity run above this high because of the significant high that it made if you was in drawdown. We didn't get that, and then we sold off during CPI data earlier today. But that's how we are going to begin looking at these zones. Okay, so we want to see a run on liquidity, then a market structure break, and then we want to identify where we want to bid or where we want to ask. So now we're going to look at some demand zones. So if we look down here, we've got a run on liquidity here. Do we have a market structure break? We do. The last fractal high, which is this high here. We have a market structure break above there, which gives us our bid price down here. Let's see if we get another run on liquidity later on in the day, or sorry, a few days after. We do, as we return back to origin. We have a liquidity run there, breaks market structure both times. We actually have another liquidity run here. And again, breaks market structure. So what we're doing as this is happening is just creating us more and more bid zones. And you can see the reason why I said it's not a specific price. We have a price where we want to enter, but it's more a zone as opposed to a specific price where we think price is going to turn. Okay, so you can see now we have these three bid zones, which is where I'm going to be looking to enter the market. So we can set, I mean, this is discretionary. We could wait for price to come down to the lowest bid zone, although it's been respected beforehand. We could trade the most recent bid zone or the highest bid zone. That's the most recent there. Or we could just sort of do something discretionary. I'm not advising do this. We could fib 50% of the zone in total and put our stop bid on the lowest point, targeting the latest ask zone. Okay. Now that's just the basics of highlighting these areas of supply and demand. As we go further into this technical analysis module, I'll go through some concepts to help bring this on different timeframes so that we converge different timeframes to give us a wider picture of where we believe price is going to go, and how we can actually trade this on live markets, because this is what we've been trading for, well, for a long time now. We know how price is going to react at certain levels, and we know what we need to see for price to leave these supply and demand zones.